All right, guys, welcome back to the channel. This is going to be a really fun topic. Did George Soros use technical analysis, or does George Soros use technical analysis? Because he still has a $27 billion fund, the Quantum International Fund. I don't know if a lot of traders know that, but one thing I do know is that George Soros is the most popular Forex trader of all time, right? And most traders on the internet, most retail traders online that have learned how to trade online, they all trade technicals, but the question is, did George Soros trade technicals? Because he is an idol amongst the many, but does he share the same ideologies that the people who idolize him carry, right? And so my name is Kleveland. By the way, if you guys are new to the channel, I do a lot of fundamental analysis on pretty much everything related to macroeconomics. Fundamental analysis gives you the idea of value. Technical analysis gives you the idea of price. So it's very important to know both. We're going to talk about that a little bit later on. Make sure you guys subscribe and like the video. All right, appreciate it. I know when people ask that, I appreciate that. All right. So George Soros, we know him. He broke the Bank of England. We're going to have a video about his entire life and upbringing, escaping Hungary from Nazis and all these different things. He's hated by so many people. It's crazy. And we're going to talk about that. But today I want to specifically talk about his trading philosophy inside of his quantum fund. Now let's talk briefly about his Bank of England trade, right? I mean, everyone knows he broke the Bank of England. Everyone knows he made about $1 billion on that position. But do we know what was the reason why he got in on that position? All right, so again, we'll go in detail at some later point, but what he was looking at was a failing economy, macroeconomics, pegged to economies that were performing well. Most traders, I would say 95% of all traders who love George Soros, don't know the specifics of exactly how he broke the Bank of England. So let's talk about that position first. He made $1 billion that day. It was in 1992. Okay, at the point in 1992, there was something called the ERM, the exchange rate mechanism. Basically, there were currencies pegged to other currencies, right? So that's something that you see happening all around the world right now, where basically you have one currency fixed to another currency, and there's a lot of problems that come with that, because let's say the US dollar is soaring and doing well and interest rates are going higher, yet you have maybe Venezuela pegged to the USD and their interest rates have to keep up with ours, yet their economy and their overall just growth and the money supply there is not moving as rambunctiously. You're going to have a big problem. And that's exactly what happened to the British pound back in 1992 and just in the early 90s and in the 80s. They were pegged to the ERM, and what was happening was the ERM was really being led by the Dutch mark, which is a German currency. And as Germany was performing and better and better and better, interest rates going higher, guess what was happening inside of the United Kingdom? Well, their economy wasn't doing so well. You had interest rates increasing inside of the UK, which was causing a tremendous amount of economic pain, right? If the economy isn't doing well, yet money is expensive, it's making it even harder for any economic growth to happen. So what George Soros bet was that, hey, look, based on these economic infrastructures, fundamentals, right? Based on this economic infrastructure, we don't think that this is sustainable. And so what he did was short the pound. He realized that at some point in time, they were going to have to depeg from the ERM, and guess what happened? Boom, he had a massive collapse. Now, this has happened in my trading lifetime, right? Where the Swiss franc was at one point pegged to the euro, and it was the most amazing trade I've ever seen in my life. FXCM, that was a very popular broker back in 2015. It blew up completely, and they have owed hundreds of millions of dollars to their constituents, and they had to basically leave the US. They lost their licensing, and the SEC basically kicked them out of the country. Now they're just an international broker, but that has happened since, and at some point I'm sure I put a chart up to show you the massive gain in value of the Euro CHF when that market was depegged. It was absolutely immense. So the same thing happened to the British pound and the Dutch mark, and that is exactly how George Soros made $1 billion. He bought $10 billion worth of pound, and then he basically sold those pound for euros, and then boom, the market just absolutely collapsed and he made $1 billion. Highly leveraged trade, not highly leveraged, 10 to 1, right? I mean, relative to where we are now, I mean, our brokers are giving us 50 to 1. You have maniacs trading 100, 200, 300, 400 to 1. It's crazy. But that was a trade using fundamental analysis. That was a trade understanding the economy. And that's one thing that I really harp on when it comes to retail traders, because most of them ignore fundamentals entirely. They think of fundamentals as the economic calendar. It's one of the saddest things I've ever seen. But that's because simply fundamentals can be a little bit more complex than just simply pulling open your chart and drawing on your screen. And I'm not degrading technicals, right? I mean, I know my phrasing there wasn't the best, but at the end of the day, that is what you're doing. And you can't really understand the value of an asset strictly looking at price, right? So when you try to understand fundamentals, you are really trying to understand the intrinsic value of that particular asset. And when you get the intrinsic value of an asset, then you can better effectively understand its price. Right? And there are many examples that we can go through. For example, would you ever just buy a car based off of its price? You see that there's a Lamborghini for sale, a 2021 Aventador for $80,000. Are you going to just buy it because its price is low? No. You're going to try to inspect it and see why it might be so priced incorrectly. You want to know the true value of this car, because if they're valuing it at $80,000, then why? What's the reason? What's going on? What internals are messed up? I need to inspect the vehicle, okay? So same thing for trading. Same thing if it's stocks, same thing for if you're trying to trade options, it doesn't matter. You need to understand the value of the asset, look at the price, and then see if there's a trading opportunity. That difference of value and price is your trading opportunity. If value and price is right here, razor thin, right? Guess what? You don't have a trade. But if value is here and price is here, then that in between, that is your profit potential. And so that's exactly how George Soros trades. He had another trade as well where he was really destroying the Thai baht back in 1996, 1997. Again, we're going to do a full overview of this guy at some point in time. But basically, the Prime Minister of Thailand came out and he basically was like, this is George Soros' fault. Our currency has collapsed. And what was George Soros taking advantage of at the time? He was taking advantage of a failing economy. He was looking at the GDP and he was noticing that the productivity in the country was going up. But as the productivity was going up, basically there was a lot of exchange of capital going on. There wasn't much inflation. And so that's just one of the strange instances that can happen where you can see more purchases happen, more buying happening, but what was really going on behind the scenes was that the banks were printing money and many people didn't know it. And there are even George Soros associates that mentioned that George Soros and the Quantum Fund, they spend time looking at charts. Of course, you have to understand how the market is positioned, but they don't go too much deeper than that. Most of what they do is macroeconomic research, and they look for different instances that can have major parabolic moves that just catalyze the market into one particular direction. That is how most big funds make money. There was another fund called Vega Capital back when the oil market crashed last year. That was around March or so. Oil market ran down to -40. That fund made over $500 million. But guess what they were playing? They were playing, again, instances where they saw oil overproduction, oversupply. They were in the oil market in the capacity of fundamentally what was happening in that space in particular. There's a cool video by Bloomberg Quick Takes. I'm gonna put that in the description below, so make sure you guys check that out. So not much technicals done by George Soros. All right, there's a lot of information out there on his trading methodology at the Quantum Fund. He does macroeconomic research. So if you guys are technical traders and you love George, hey, look, if you want to be more like George, start learning a little bit more about the economies, because then you're going to be smart money. That's the difference between retail investors and institutional guys. Retail guys study price, they're dumb money. They don't know how to correctly price an asset because they don't know the value of the asset. Institutional guys are smart money because they understand value and they can correctly price assets because they understand the value of why assets are moving. All right, that's the difference. And I would love for you guys to make sure that you understand that. All right, so we have a fundamental boot camp. We help you guys understand the 15 fundamental catalysts that drive 95% of all currency volatility. That link is also in the bio below. Hope you guys check it out. And if you guys need anything else, let me know. Any questions, any type of content related to fundamentals, I'm here. This is what we do full time. We're always in markets on a daily basis. It's a fun business and everyone's apparently getting in it. It's the most insane growth I've ever seen in an industry at any point in time, and it's only going to get bigger. Back in 2015, I said everyone with a bank account is going to have a trading account. And now when I open my Cash App, guess what? I can store my money and then I can buy and sell Bitcoin. It's crazy, okay? So, guys, again, if you need anything, let me know. I'm Cleveland. Talk soon.